to hand the conference over to Mr. T.K. Sridhar, CFO, ABB India Limited. Thank you, and over to you, sir.
Thank you very much, Janice. Good afternoon to all of you. I'm sure all of you are safe and your family members are also safe in this pandemic time. Right, and thank you for joining this Q1 2021 analyst call. We had a board meeting yesterday. The results were declared out in the market yesterday, and then we had the AGM also today, and that's why we are having the call a bit later in the day today. And in the meantime, I hope you could have had a look at the presentations what we had already loaded in the website. Okay? So with this, I would like to hand over to Sanjeev. So on the call, I have all my team members, the management team, listening to this particular call, and will be ready to answer any questions which they would like to take when it's appropriate. So over to you, Sanjeev.
Thank you, Sridhar. Welcome to Q1 for us 2021 call. As Sridhar mentioned, these are very challenging times for all of us, for our employees, our customers, our partners, and all of you on the call. I'm sure have been taking all the precautions during these times because in next couple of weeks, I think staying isolated and also insisting with the family members they stay isolated is the only way to break this cycle of infection. So that's exactly what we are trying to do in the company, and we are running it to a level which is at the essential level and try to keep the minimum exposure to our employees and our stakeholders. Now, next please.
Sanjay, you should in the first slide.
Slide, please. Sridhar, are we on the next slide? Maybe on my side it is not updating, it looks like.
Divya, can you go back to the first slide and come back to the next one?
Just wait a sec. I'm logging in again. Maybe that's the reason. It's on my side.
Sorry to interrupt. You may please refresh, sir.
It's okay. It's refreshed now. It's okay. I can see. Thank you. So priority areas for our January to March 2021 quarter have been obviously health and safety, top of our mind, ensuring business continuity during this period to find ways to stay connected with the customers and continue to serve them with our products and services. And also at the same time, keep on watching the high growth segments which are visible, but at the same time also see the budgetary impact on the muted segments who will find better life as we go forward. So that those have been our focus areas. And of course, for last almost 1 year now, very strict and sharp cost and cash management. Next, please. So if we look at it from the market segment, so we have seen good momentum across the market segments of our interest, and we have seen some key financial metrics pick up sequentially. So if you look into the orders, if you see sequentially, we had a jump of orders between Q4 to Q1 is almost 24%, and we have a stable revenue base, and I think we were able to execute, and our customers could absorb the deliveries as well as services from us, and we have a good improvement in our profit before tax PBT, and of course there is a one-off gain of 75 crore built into it, but still on a relative basis it is a good operational performance and improvement. Next, please. Now, in terms of highlights during the past quarter, we maintain customer centricity and innovation at our core. So we did see installation of a project smart smelters and salt started to reduce water usage in Shimla, Himachal Pradesh. This is basically a template for a city, whichever city wants to optimize the water consumption as well as distribution. I think we have solutions there. We implemented solutions for Chennai Metro by supplying drives into HVAC system. Ola, which we know as a kind of a cab hailing company, they are setting up a very large electric two-wheeler factory. It's a global scale factory, and they have been in dialogue with us, and they have entrusted our robotic solution for automation of their entire factory. We have been working with IOCL, and they have committed to 76 locations in Tier 2 and 3 cities to set up the EV charging stations with us. And also energy efficient drives were commissioned for pharmaceutical major in the country, and electrification and flow meter solution for clean drinking water for Surat Smart City in Gujarat. I think we have been engaged with them for quite some time, but then we continue to augment their capacities and solutions. Next, please. Just to give a flavor of market segments which are of interest to us and how we see them today. So it's self-explanatory. So we see that even the moderate to low market segment in terms of right now the growth, we see that these market segments are receiving some budgetary support, and they should also start moving well going forward. But we have to see how well they perform as we go forward in following quarters, the next quarters. The largest e-commerce company in the country, they are using our solutions for setting up their data centers, which are growing at a good pace. Our robotic solutions are being deployed to an electronics manufacturer for a very large-scale component finishing unit. We are under NDA, so we cannot name the manufacturer. Same way, pharma companies are accelerating digitalization using our industrial automation or process automation solutions. And a lot of leading F&B companies are buying our energy efficiency and robotic solution for end-of-the-line palletization. And we see that this is a new category which has opened for us. We used to be in robotics very automotive heavy, but now we see electronics as well as F&B and FMCG companies are users of our robotic solution, as well as there's a lot of focus on the energy efficiency. So our motion solutions are also getting absorbed there quite well. And I did mention that the water is one area of our focus, and we are seeing good traction there. Next, please. Well, with our presence in this country, we had a 71st AGM yesterday. So over a period of time, we have learned that we need to bring to India the best of global technology, but then at the same time continue to localize it to a higher scale to develop the local supply chains, and it helps us by reducing our the import content exposure, and at the same time improve spirit of made in India or Atmanirbhar Bharat. I think we continue. This is a kind of not only a local program, but it is a global ABB program. They really believe in making sure that we continue to develop local supply chains, and as they mature and as our product lines and solutions mature, and those solutions are global standard, and these products then start finding their way in the export market. So that has been a cycle we have been seeing in many of our product lines, but this is an area we continue to work on. Next, please. We have in ABB, India has a very focused ESG strategy, which we are paying very high attention to now, wherein we have a 3-phase program as illustrated in the middle. We have phase 1, phase 2, phase 3. First phase, we are going into green factory buildings and green campuses. Phase 2, we will go for green manufacturing processes. And Phase 3, in collaboration with our global product managers, we will have the green products as per our global and local agenda. So we are implementing at this point of time, site efficiency, innovation in design, water conservation, indoor environment and health, energy conservation and material conservation and focus. We have a 10-point ESG framework, and as you will see that every quarter when we talk to you, you will be able to observe some progress in these areas. This is a focused activity driven at the top management level with myself and my colleagues in business area and the divisions. They're fully committed to this program. Next, please. So the way we are working within ABB India, sustainability is embedded in our business. So we are committed for low carbon society, preserving resources and social progress, and we have a very clear dashboard which we start measuring it even more closely, wherein the safety being on top of it, safety in all aspects of what we do. We measure our hazards and we make sure that they get resolved very quickly. So right now, as I speak to you, the hazard resolution in our operation is at 98.5%. Health and well-being during COVID-19 period, we have taken measures to protect our employees, our contractors and our other stakeholders, and we continue to make sure that the right investments are made in this area. Our CSR programs are built around 12 large community projects, and for last 6 years, if you see our track record, we spend 100% of our CSR money and we commit to it. As far as the waste recycling is concerned, we are at the moment doing 93% waste recycling. We work very close with our with our suppliers as well as our teams to keep on finding the opportunity how the waste gets eliminated, and it's really done at a granular level, and we continue to find solutions with the packaging suppliers or whoever brings in material which goes into the waste bin. We find a way that it gets recycled. At this point of time, we have a green power usage of 40% with renewable, and we already have a plan to continue to increase it, and you will see these percentages will increase as we go forward. We had a water reduction of about 30% in our operations as we noted. And we have in last 10 years done 234 on-site assessments of supplier sustainability, and this program continues. Next, please. So promoting diversity through social responsibility is on our top of our agenda. We are institutionalizing this program. At this point of time, we are sponsoring 100 meritorious yet coming from underprivileged background girls who are interested in science and technology. We will financially support for their fees for 4 years. So entire fees we will take. Not only that, our technologists, they will work with them on regular times to give them sense of new technologies in the market so that these young minds are shaped. And we will provide mentorships as well as internships to them so that when they are coming out after 4 years, they are very well prepared girls. And we know that by example that if they come well prepared and they get absorbed in industry, not only they will become very good women leaders and good engineers in future, but also there's a huge impact in the family, and the family level of subsistence also improves in a dramatic way. So this is again is an area where we are committed, and we always like something which is institutionalized. So that's why we work with like say in this particular case, Leela Poonawalla Foundation to sponsor this cause, and we will continue to expand it. So there are many more programs. I think you will get to see in our financial report. And this year, yesterday in the board meeting and today in AGM, we announced our reconstitution of our board. And you will see that we already have 50% representation of board members among women and men. So we have 3 women directors, and now we have 3 men directors. So we have reached that at top of that pyramid. And the message to all management teams, different divisions and product lines is to make sure they are reaching that kind of objectivity and focus action for replacing new positions as well as hiring new ones, and consciously go for recruiting women, and I think we will see that change happening in years and months ahead of us. So with this, I stop here. Please go to next, and I hand it over to TK Sridhar, our CFO, to take you through financial highlights. Over to you, Sridhar.
Mr. TK Sridhar, you will please go ahead, sir. Your line is unmuted.
Sridhar, are you on the call?
Yeah.
Sridhar, you may please go ahead, sir. Yes, you are. Please go ahead, sir.
Okay. All right. Thank you. So this particular slide is, of course, the information is already available to you through the press release and the SEBI. Just to give some color on the orders, I think the last year, the same quarter, we had a major order from an industrial automation sector. Plus also we had a good order from the railways for power traction, which in this particular year was not there. So in other words, this particular order is fully backed up by the base orders from the different channels to the industry. So order backlog remains pretty much very credible. So these are fully executable in the coming quarters. 4,300 crores roughly, which is there, and we did a revenue of 1629 crores. So in spite of, I think, the expectation, or we could have whether we could have done better, right, is something which it depends on how the order backlog is executable over a period of time. And if you go back to how these orders have been executed, they have been collected in Q3 and most of them in Q4 of 2020. So with the execution times that they have, I think they fall into the next few quarters to come, right? So that's how we see that the orders of the order backlog which we have is fully executable in the coming quarters. So PBT, I think, was before including all the exceptional items at 204. So it is included in 75 crore of an exceptional item of, let's say, over disposal of an asset, and profit after tax also we had. But I think I would say the highlight is the operating margins improved, and we did see an increase in the material costs as what you would have seen. I think there are a few reasons to that. One, of course, the project revenue is higher, and that's how you see it in the process automation revenues which are picking up, and the services were a bit dented. It's more because of the flexibility of the people to move and cater to the customers. So that's was at 14% while a normal rate is on about 17%. So that's another reason. Plus also we had the impact of the material cost, the commodity prices hardening, as anyone would have seen, right? So if you go to the next slide, Divya. So last but not the least, very important for us at this point of time is cash. So cash, we did have a good select collection in Q1 as well. So we are having a cash reserve of 2,500 crores. So this is basically what I touched upon in terms of material cost, and then employees cost remains constant. So we did not take any cut at the point of time as what we had last year. So, but I think it's more how we have phased out the people in terms of our loading and other stuff is how we have measured our personal expenses. Right, so less number of third-party contract services whom we have in the load, which has been done with a lot of automation, as what has been done in the floor space as well. So the reduced expenses, as you see, I think we are at 257 crores compared to 300 levels normally, an asking rate as what you would see. I think there are two elements to this particular topic. One, of course, we had a favorable forex gain, which is mark-to-market gain, which is temporary in nature to the extent of 22 crores. And also we had certain provisions which were done in the last quarters in the process automation. So that was actually not there. That means that is one thing. And the balance is basically more due to Better savings in the cost or reduced expenses is what we say, because in terms of travel, we definitely had some savings. Of course, we have with the green energy initiatives, what we are being taken, we could see a good impact on the power cost as well, and the efficiencies have definitely improved over the period of time. So the exceptional item is what I told, and the current tax rate is 25-26% is what is normally there. Next slide. This is the next slide, please. Yeah, I dwell upon a couple of minutes on each and every division. So electrification is on very solid track. So they have a order backlog of 1,355 crores. I think they do see a good visibility of orders. I would say all the divisions in electrification had showed really a good momentum. And of course, they saw and they were leveraged upon the capacity uptake and the cost rationalization. So they also had before a favorable forex impact on the mark-to-market area. So can you go next? Will you have the next slide? So motion. So motion and electrification nearly form 75% of our total business, right? So while 20% comes out of process automation and 5% from robotics at this point of time, and they definitely both of them have a higher contribution to the profit margins as well. So motion was a clear example as to how they leverage their capacity to cater to the market needs. So they did a good profitability of 90 crores in the current quarter with a stable revenue as what you see, and they also see sequentially an order uptick as what is done, what you could really see the graph trend on the graph saying that. Next slide. Yes, process automation is a big comeback in this particular quarter, because we saw a lot of headwinds in the last few quarters in terms of the orders getting not finalized or getting delayed, and so on and so forth. I think this quarter they were able to turn around with good orders from both the process industries as well as energy industries. We hope it continues. So, we need to watch out as to how with the current trend it pans out. And profitability, I think they had their balance sheets have become pretty clean and agile. So therefore, we expect that this profitability should basically remain stable. Next, robotics and discrete automation. I think this is again another story of a comeback, and I would say here, I think 4 to 5 quarters before, we were really thinking as to how this particular business will go, and we were very constant in saying that this is an future growth engine for ABB as such, and especially in India. So, and that's the reason why we went with an expansion of the factory in India. So, and now we could see really the presence of robotics in the market has gained traction. So we see going forward, I think they should be able to build up this installed base to expand the business, but in a gradual way as the industry tries to adapt to those new technologies. Next. Yeah. So this is more or less what I told. So the electrical and EL and motion, they form the major part of the business, and of course, in terms of profitability, they tend to be higher, contributing to the bottom line. Yeah, go ahead, Divya. So on the outlook, I think our first priority today, this is I would say unprecedented in terms of intensity. While we knew this would come, but in terms of intensity, is far critical than what it was. This therefore remains the first priority for us to manage. And of course, while we do this, we also look at the continuing the business. So that's important, something which you need to understand. And we will focus on the growth segment, as what some of you had already elaborated. And while we do so, I think we also have a task to do in terms of mitigating the headwinds of commodity and forex, which are key drivers to remain competitive for us, and also engage with the stakeholders and customers to ensure that we are able to deliver to them and we still occupy the most of their mind space. So this is the last slide, probably, Divya. Yeah. So can we now open the question for Q&A, please?
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Also, reminder to the participants to please limit your question to 2 per participant. You may come back in the question queue if you have a follow-up. The first question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi, good evening, sir, and congratulations for a good comeback on the performance side and the cash performance as well. My 2 questions would be first, how do we look at the inflationary impact headwinds, both in terms of orders as well as performance on our, as in the next 2 quarters for us, given that good share of orders were won? And what would be the share of fixed price contracts in our portfolio today, which could have an impact? Second would be, if you look at the group, they have indicated carve out of the e-mobility portfolio or partially monetization, not full exit like PG. So what could be the likely implications for the India portfolio here, which is still in the nascent stage because of realignment at the group level? And if you can give some comment on the revenue share and performance of exports and services, which was missing in the presentation. Thank you.
So Sanjeev, so let me answer 2 questions embedded in 1 question of Renu, right? And then the balance 2 question you could probably pick it up, right? So first question is simple one, which is what is the share of the business, right? In terms of exports, we were 11% this quarter compared to what we used to do around about 13-14%, and this reflects because this reflects the situation of intake of orders from the other countries because they were impacted because of the COVID at this point. They were before us, and so there was definitely restrictions on the movement and the uptake. And but whereas we remain strong on the order intake, which says that our orders, our backlog definitely has a good content of orders. The next thing about the inflation, so we see there is an inflation factor which is being told by market at rating at 6%, and we need to see as to how this develops during the COVID. So, but what I feel is that ours are all short-term orders at this point of time, other than probably PA, who has a longer time orders which is smaller, and I think they are all few. I would say out of the total backlog, probably 15 to 20% could be the contracts which are hedged towards price variations or fixed or any other variations. What we see with the balance being short term, I think they should not feel any headwinds, so they should be executed. We are already procured material, which should have been done there. So, so next few questions, Sanjeev, I think you could pick it up.
I think the question was about EV charging business. So, in India, as you rightly said, Renu, is in nascent stages. So the whole industry is in nascent stage, but we are seeing a good growth here, wherein the early starters or the people who are putting out their vehicles out in the market, they are buying it for their showrooms or certain placements in their area. So we have a reasonable pickup, but we have a very strong business and very fast-growing business in Europe and North America and also in certain Asian cities. In fact, ABB is considered to be number 1 in EV charging globally. So this particular business, the growth rate and the support it requires is very different than the ABB normal portfolio in terms of growth rates as well as support and the impact is required. So on that basis, that's what I got that feedback also from the group, that for that reason they are going to place it out and let it live its own life because this is a new area which is opening up and it has a very high growth rate and very flexible approach that is required. So yes, ABB is going to place it out and the planning is being done there. So as far as we are concerned, we don't fully manufacture it here, so we have more of supply orders into the market. So I think as such, we don't have a very large footprint impact of it on India as such.
So at least it would remain in the listed entity for the time being, or there could be some plans to carve it out of the listed place here?
So I think typically when the group decides in a certain way about a business, then what happens is that entity will have its footprint across the globe, and they will decide where that footprint is and how they want to channelize it into the market. So that visibility we don't have it. But typically, before we decide on it, we take it to the local board. We place the situation in front of the local board, and then board deliberates how do we see the decision making around that business.
Sure. Thanks much and all the best.
Thank you. Thank you, Renu.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. So the question is more from an ordering...
Mr. Arora, I'm so sorry to interrupt. May I please request you to speak a bit louder?
So the question is more from an ordering perspective and the inquiries. So, sir, if you look at quarter on quarter, if I don't know, will you be disclosing the Ola order number? But generally, quarter on quarter, we are seeing, despite 6 months of country opening, everyone growing so fast across industry, our base ordering has come to about 1,500-1,600 crores on an average. Just wanted to understand, are the customers taking more time here because of this COVID going on? The inquiries levels are still, the inquiries are still not getting executed into the order inflow, or you think it will take a little bit more time where, the bunching up of ordering should happen in the second half? If you can talk about a little bit on that, including the any benefit of PLI or any, greenfield inquiries from the steel sector you are seeing, that would be helpful. And the second question was just a clarification. What you said about a forex gain of 20 crores, that is getting reflected in the reported EBITDA. Is that correct?
Yes, you're right, Nitin. So it is getting reflected as a part of the other expenses.
Getting it. So in the segmental, where does it getting reflected, if you can throw? Because then margins in that case looks down. I understand the revenue growth is also lower because of, you stated in opening remarks, because of COVID and,
So first of all, the mark-to-market is more about temporary gain or loss.
Right.
That's something which you need to get through.
Absolutely.
Right. And the next thing is that it is spread across all the divisions in ABB. So we have 21 business divisions in ABB, and so it is spread out of that. And if you look at it, it is spread across all the divisions. So we don't have any one single division having an impact or something like that.
No, that's correct. We have to remove it and see the actual EBITDA. So that's correct. So just the first question. Thank you.
Okay. On the order side, as we explained, and you can see that on the robotics and automation, as we have been speaking on the last quarter, we see a good traction and good investments and good faith. The large scale manufacturers are imposing on us, and also we see when the new manufacturing is coming in, so it is being automated at a very, very high scale. So that is a positive sign for us for the machine automation as well as robotics automation. In the industrial automation side, we do see that there's an inquiry build up, but core sector should pick up, but then we don't see that capex converting into orders yet. We do hope that in the third quarter it should start forming itself, though the inquiry visibility is quite decent. In the electrification and motion, as Sridhar explained to you earlier, it's about 75% of our inquiry base. So I have the business leaders, CP Vyas and Sanjeev Arora, for electrification and motion available. I'll allow them to answer it. How do they see the inquiry build up in the market and the conversion? Starting with you, CP, for electrification.
So thanks, Sanjay. What I can say, if you really see from the last November onward, or I say from October onward, we see the positive trends and we see the inquiry build up, especially for the base order, and which are the required from the market point of view. The sudden, this second COVID wave which comes suddenly, which is a surprise, it gave a little bit impact. But from the opportunity point of view, we see so electrification point of view, the reasonably good opportunity and inquiry banks are available with us at this moment from various growing segments.
Thank you, CP. Over to you for motion division, Sanjeev Arora.
Thank you, Sanjeev, and good afternoon all. So to answer your question, if you see quarter on quarter, be it our Q3 or Q4 or our Q1 results, so we have been quite consistent, from after the first hit of COVID, and I strongly believe that yes, we have a good amount of inquiries, and the projects were moving in the right direction. Not only the light industries, but also you can see the investments in metals, in cement. So all the core segment also have started showing the positive trends. So that's my take. I hope I was able to answer your question.
So we also have process automation represented by Balaji. Balaji, do you want to add something on the core sector?
I think you have covered it, Sanjeev. We while the inquiry bank is strong, but since these projects are slightly longer duration, so we expect more conversion towards the end of Q2 and possibly in Q3.
Thank you, Balaji. I hope that answers for you, Nitin.
Thank you so much for this. Thanks a lot.
Thank you. The next question is from the line of Ajinkya Bhatt from Macquarie. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is, you have talked about this big and landmark order from Ola Electric in this particular quarter. So my question is the entire order booked in the robotics and discrete automation segment, or are there elements of it spread through maybe electrification and motion segments as well?
So currently our commitment is for the Ola Electric, but is for robotics division. So that's where we have booked the orders, and we have not booked the entire order yet. I think it will come in 2 waves, right, as the expansion takes place, and that is the case for many other orders which we cannot mention because of our non-disclosure agreement with some of customers. We also have some other large-scale orders in our books. Which again the process has started, and it will continue to kind of give the benefit for next I would say 4 to 6 years. Yeah, so that's the kind of a scale we are looking at. So if anybody was asking whether we see some scale manufacturing coming to India, yes, it is coming, and whether they are using best-in-class automation technology, answer is yes. And yes, whether they're using ABB robotics, the answer is yes. Now, when it comes to a very large facility being put in, then of course there is a scope for our motion division as well as electrification division, and partly for our process automation as well. So those things get channelized through our channel partners, also through OEMs. And what we do is whenever we see such a large capital spend, we connect with our channel partners, then they start chasing it. And I think that conversion of that opportunity is yet to take place.
Okay, so you're saying that the entire order is not yet booked. So until what period do you see that this will keep coming into the order inflows? Will it be for next 3 quarters, 4 quarters, or will it continuously come for next 4 years, as you mentioned, as an eventual big 2,400 crore facility that Ola is planning?
So we don't give that particular prediction or an forward-looking statement, right? So I think what Sanjeev was mentioning is ABB is very placed for their future growth or an order expansion process as well. So with the first phase where we are gotten, I think we could be a preferred supplier. So that's what I would say. But still, every business has its own commercial practices, and it will go that way.
Okay, understood. Thank you so much, sir.
Thank you. The next question is from the line of Bhavin Vitani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. I have 3 questions. First is, in the data center, which normally people tell it is 30 crore per megawatt, what is the opportunity canvas for ABB and this has been mentioned as your number one growth driver. So some color on that will be very helpful. The second is a more leading question. When we see industry coming out, typically steel, cement, when they see improved margins, they start working on efficiency and automation. Some color on that will be useful before they go in for large-scale expansion. Are you seeing that, and is it reflected in your inquiry book? Third and the last question is a very specific question, which is the information technology expenses. Before the PG was demerged, it was a combined company. It used to be 1.3 to 1.5% of revenues. And now we are seeing that has risen to 3.1%, and it has been consistently rising. If you could give color on that, will be helpful, because your peer set like Siemens, it is less than 1%. Globally, parent, this expense is less than 1%. So 3% of revenue looks high. If more color on that will be helpful. Thanks. These are my questions.
Okay. So, Bhavin, thank you for the questions, and I will answer the third question. But in the meantime, I think Sanjeev has got disconnected, so we've got to connect him back. So the first two questions probably I think Sanjeev would try to come in and articulate correctly, but he didn't hear the question. Probably need to repeat it once again. Sorry for that.
No worries.
So coming to the IT expenses, I think this is being picked up from the annual report as where you had seen this, if I'm get my this thing correct.
Yes, Sridhar.
Right, as payment to the group companies.
Correct. Yes, Sridhar.
Right. Okay. Very good. Thank you. So, so now there is a technical input which I would like to give to you over here. So while we need to understand, PG, Hitachi PG is still getting supported on IT systems from ABB side. So, so till they actually are getting their full IT systems up and running on their own, right, they will require it for the couple of another 1.5 to 2 years to go. Right. So what we are doing is that while we are recording the expense as expense, but the recovery from them for the services provided comes as a part of the other income over there. Right. So or as a part of the income what we have, service income what we have. So on a net basis, if I exclude the so-called the cost debits to the PG and the so-called credits from PG for this, right, it would still stay in the earlier levels as what you had seen.
Sure. So the 3% will come down to 1.5%.
1.5 to 2%. So we are basically investing a bit more at this point of time to address the future digital needs of the products and services what we are coming up with. Plus also, I think there is more enhanced focus on account of cyber security and other protocols which are getting enhanced. So this would be definitely be an item which would have a spend, right? Coming to the other, comparing with other companies, I have very little to say because I do not know how the cost structure and the cost model works in the particular organization as such, right? So some people treat it as a part of the product cost, some people treat it as an expense, and so but whereas we treat everything as expense other than in the material cost, which is pure material cost required to convert into equipment. Yeah. So over to you, Sanjeev. So Bhavin, for the benefit of Sanjeev, if I request you to repeat your query, please.
Sure. So data center has been identified as a number one growth opportunity for ABB India. It will be useful to understand in a data center which is usually 30 crore per megawatt capex, what is the role that ABB product contribute in that total capex, and how are you seeing this opportunity in the next 3 to 5 years? Second is when we see pick up in the capex and we see profitability improvement in the commodity industry, they start with process improvement, efficiency improvement, and then they go for large scale expansions. Are you seeing that, and does ABB become a beneficiary because energy efficiency related products etc. is a prime focus for ABB?
Right. So yeah, thanks for that. So as far as data center is concerned, I have seen this industry grow in my previous experience when I was working for global side of ABB. I was also the so-called the executive sponsor for Google, Microsoft. They were setting up their data centers in Singapore, Taiwan, also in Europe. So I was very closely associated. So essentially, data center is nothing but a very high consuming electricity zone, wherein servers are very power hungry, and what they require is they need to be fed a lot of power at a low voltage level inside the building, and outside the building is the medium voltage level. And of course, you need to maintain a lot of HVAC, wherein the motors, drives, and other elements get consumed, and then also you require a lot of software to manage the data center. So these are the sweet spots of ABB, very well established and very high reliable products and solutions, which are appreciated by the large scale data center providers. So if you really look into the data centers, I think scaling up in India has just started. We haven't seen the sizes which I have seen outside India, but now some large players have come in, and they are working with ABB for last 2.5 years. So they are kind of testing waters, then they are scaling up. So as they scale up, this megawatts, the amount of megawatts they consume in each location goes much higher, and they are mind-boggling numbers. And accordingly, we have an impact on the supplies of the power supply equipment that we do, and also the software that is required to manage them, and also the cooling requirements. So then there's a pull through for our motion products there. So that's the data center story. It is in the early stages in India. It will scale up as we go forward. Now, CP, you want to add some color to it? How you see the data center as a business for you in electrification?
Sanjay, you put in a proper way, and as I explained by you very clearly, is a starting point, and it will be a good opportunity from ABB India point of view for the both. I'm not saying the electrifications, even also for our process automation side also, because this redundancy part and the reliability part and the latest technology part, which is really going to help ABB from the data center point of view, and we are connected with almost all the global data center through our ABB. So I see a good progress and good growth is coming in the future.
Right.
What would be the wallet share in a 30 crore per megawatt total capex opportunity for ABB India's products?
Probably, I think we can figure it out, and next time if you ask this question, we can give you some indication. But that's how we don't look at it. We don't calculate that way at the moment. So when you had a question with respect to capex, profitability, energy efficiency. So yeah, I think as far as the market is concerned, I think we are seeing a very distinct change in the Indian large scale or medium scale or the fast growing industry. Their need to buy the best quality equipment and also looking for best in class energy efficiency and best in class what you call productivity out of what they spend on. I think that era has arrived here. And we believe that even mid to large scale manufacturers and the capex spenders are looking for those opportunities, and they are pretty sophisticated in their evaluations now, and they are exposed to global technology. So we don't see ourselves being run through with very hard negotiations against very local suppliers there. So we see that they are really looking for quality, and there's a premium for productivity increase and premium for energy efficiency if the technology provides it. So that's the trend we see.
Thank you so much for taking my question.
Thank you.
Thank you,
Ron.
The next question is from the line of Ajinkya Bhatt from Macquarie. Please go ahead.
Hello. Hi, sir. Thanks for the opportunity again. So just one question on the margin side. Now, in this particular quarter, we have seen that the two big segments, electrification and motion, have seen a sequential margin decline, the EBIT margin decline in this quarter. Historically, these two segments have reported somewhere between 9 to 10% kind of EBIT margin. Going forward, is there any expectation that these segmental margins would normalize towards historical levels?
So let me take this question. So when you're looking at probably electrification division, I think last time when you're looking at it sequentially, they had a huge turnover in Q4, and which is slightly flattish in this particular quarter. So that's basically a volume gain which has played out.
The operator, I'm sorry, but we are unable to hear you.
How come?
I can hear you.
Yes, sir, I can also hear you. Please go ahead.
Yeah. So if you're looking at EL on a quarter-to-quarter basis.
Are you able to hear us?
Yes.
Yes, operator, we can hear Sridhar. If you can allow the call to continue.
Okay.
Please go ahead, Sridhar.
So Ajinkya, so I think when you look at the EL margins, EL margins are definitely very stable and very increasing. Right. So Dashmi, are you there on the call?
Hi, Dennis. I think everybody else is able to hear. Maybe there is some particular technical glitch from your end, because all of us can very clearly hear both Sanjeev and Sridhar.
So probably I think you could.
I will sort this out separately. Yeah. Please continue.
Right. Or you can. Yeah. So EL is in the right direction, and I think they have a strong mix of products and exports, and also retrofit solutions, what they give in MD switchgears. But I think the margins will stabilize going forward. Yes, they have an import content which they have to deal with, and I think accordingly on the other side they will also have exports which will come in to buffer it up. So on a long-term basis or on a trajectory basis, I think they are in the right direction according to us.
Sir, and what would be the improvement levers, especially, ABB Global Parent, for example, has said that CY21 EBITDA margins could be in the upper half of the 13 to 16% range. That's obviously global number. Here in India, our current EBITDA margins are roughly about 7%. So would we be moving in that double-digit direction, and how soon could that happen? What could be the levers to achieve that?
You are talking of the blended total, right?
Yes.
Yeah. Okay. So I think this is a very simple answer for me. Okay. Why? Because we are operating in India, and 85% of our revenues come from India, where it is a very competitive landscape. And when it comes to comparing it with the global, yes, our endeavor is to go to double-digit PBT margins, and then we travel towards the corridors what are set by the group, right? So our ambition is to definitely go to a double-digit at the PAT level, and that should definitely come up when the market starts to support us, and we have free from all these disruptions what we are currently facing. So what I mean to say is, in a steady state, right, and when all the some support is available both in the market plus the other economic factors, I think we are well entrenched to get to those particular numbers for the local level, right? So comparing it to, I think if we come to the 10% PAT, automatically the operational EBITDA margins is what the group was saying, we should be near to that.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Sujit Jain from ASK Investment. Please go ahead.
Hi, Sanjeev and Sridhar. A question is on building technologies and data centers. Data centers, as you highlighted, one of the key opportunities that you have. But even Hitachi ABB talks about data centers as their key opportunities. So in these two segments, can these two entities compete head-on, or there are areas which they will, they have carved out for themselves, like you for yourself and Hitachi ABB for itself? And on EV chargers, will it largely be, as it stands today, will it largely be public infra, or you'll also have tie-ups with OEMs such as EV, PV players, and will you have B2C user interface platforms, etc.? Thank you.
Okay. So as far as the building technology and data centers are concerned, so even when Power Grid was part of ABB, segregation was very clear. the Power Grid Hitachi has a high voltage substation portfolio. So whenever you are bringing very large power into the data center, so it has to be stepped down from the grid, and you create a substation with transformers and switchgear for high voltage switchgear, and then you step it down to medium voltage level, and then on that point onwards, ABB portfolio or a current ABB portfolio kicks in. So medium voltage, low voltage. So that's how the segregation was in past, and that's how the segregation and positioning is now. That was about the data center and a specific question to you, the Hitachi Power Grid.
And building technologies?
Sorry?
Building technologies, can these two entities compete head-on?
As last I know, as far as the Hitachi Power Grid had the solutions in the high voltage switchgear, transformers, associated protection equipment, and substation division. So these were the 4 divisions they have. So in the buildings, again, if it's a very large building which requires a high voltage substation, of course, they will provide that. But going beyond that, I wouldn't know if they have a product portfolio for it. But if they want to act as an EPC and buy the products from the market and integrate it, that part I'm not privy anymore, because that's a separate entity and separate company now.
Sure. And regarding EV chargers?
As far as the EV chargers are concerned, yes, EV chargers are bought individually, but mostly in the, if you go to the mature market, so typically it's taken as a public infrastructure, and there are specialized companies who set up those networks, and then they run their power delivery as well as charging mechanisms using this as a endpoint solution. And then it becomes part of public infrastructure, and a reliable public infrastructure also requires reliable, EV chargers, and that's where we become suppliers of solutions to such large-scale implementations.
Sure, thank you.
Yeah, so Janice, I think probably one more last question, because we just started a bit 5 minutes late, I think.
We take the last question from the line of Jonas Bhuta from Phillip Capital. Please go ahead.
Good evening, gentlemen, and thank you for giving me the opportunity to ask questions. Just one quick question. So what we've seen this quarter is the unallocated expenses again go up much higher than sales growth. And now they account for almost 5.5% of sales, which used to be about 3.5% 2 years back. So is this again completely related to that IT expenditure that you explained about earlier in the call? And for the year, should we be annualizing this number of about 90 crores on the EBIT level as our unallocated expenses? That's my only question. Thank you.
Okay. So very good. So thank you for this particular question. So I think I will do your quarter-to-quarter comparison. Okay. So the unallocated cost, if you look at it, has 2-3 elements, right? So which I would like to explain, right? So why it is this way. Right? So in this quarter, as you know, as per the current CSR Amendment Act, we have to account for the full CSR spend in the first quarter, and it could not be on actualized basis. So the amount accounted for that is roughly around about 10 crores, right? And the last year, the same time, so we had an income tax refund of almost 18 crores, and therefore, and also a reversal of a tax provision based on the order, which we received to the extent of another 4 crores. So I think if you eliminate these one-offs, so we would be in the same range as what we are annually. So I think our view on this is pretty razor sharp, right? And it would remain the same levels as what we are, excluding these one-offs. And these one-offs, what I told you, is only for that particular, and it did not occur in the next quarters.
So from 90 crores is actually a recurring expense of just 75 crores. Right?
Exactly. You're right.
Got it. Thank you, sir. All very well.
Right.
Thank you.
Thank you very much.
Well, ladies and gentlemen, due to time constraints, we take that as the last question. I hand the floor back to Mr. T.K. Sridhar for his closing comments. Over to you, sir.
Yeah. So thank you very much all for attending, taking time to attend this particular call in spite of all the challenges what we are facing today. So if there are still some unanswered questions, feel free to write back to us. We will make all effort to give you all input which is required for your analysis, right? And thank you for all the support and being with us during this troubled times. Wish you all a safe stay. Thank you very much.
Thank you. On behalf of ABB India Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.